Hello, how you doing, everybody? Let me know that you can hear me and that you see, you see the camera. How you doing? In the chat box, type in so I can know that you are with me. It's been a while since I've been here in the The5ers Trading Room. Happy to come back. Okay, wonderful. So thanks so much. Let's start our trading session. So today it's the 3rd of April 23. I'm Michael Katz. I'll be your host for today. I'm the CEO of Tradepool. Tradepool is a new company, a new brand powered by the 5ers, and we're basically a prop for stock trading. So if you're into that, feel free to join us at tradepool.com. So basically we got like 12,000 stocks and ETFs to trade on. So if you're into that, we just launched our low cost program as well. So go ahead and check it out. We'll talk about it later if we will have time and you have any questions. Let's jump to the screens. Oh, just before that, on the right or left corner, if you look, you have like a QR code. You can scan it right now with your cell phone. You can scan the QR code and get right to the trading festival that we will host this June in London. So if you are around London, in Europe, or you know what, we also have guys coming all the way from Indonesia and from the US, Australia, Hawaii. So we are, if you're into trading festival with competition and beer and lots of games and tons of high quality education, definitely come and visit us. It's going to be this June in London. So just scan the QR code and get to the website, get familiar with it. We have obviously limited seats. Going to be roughly 500, 600 traders just like you. So it's going to be a blast, definitely. Okay, that being said, let's go to the charts and see what's going on. So me in my trading, just a quick introduction for those of you who are not familiar with me. Basically what I do is mostly trade stocks. That's my background, but I also trade futures. That means that I trade indices mostly and some commodities. So the US market is definitely one that you want to pay attention to, even if you're not trading indices and you're only into the currencies. Definitely be aware at least of the movement of what the US market does, because in the end that's the king of all. You know, that's what will lead the economy or fail the economy. And if you get the idea of what's going on and what's the sentiment around it, you might find a good trade on your currency. So make sure you do that. In the meanwhile, while I'm going through the charts of the indices, you can definitely write some pairs or whatever it is, asset that you want me to analyze and check it out. And if you have any trade on your mind as well, but share it completely, not just the symbol. Tell me what it is that you're expecting to see or want to do, and you know, long, short term, long term, and other stuff that you know, help you decide why you want to join. You see that I have a problem with the camera for some reason, so I'll drop it and remove it. Okay. You still have the QR here for those of you who want to click on it and see the Traders Day Live, the event in London. So let's first start with the NQ. The NQ is the NASDAQ 100 top technological stocks in the US. I'm on an hourly chart. We can go a little bit like a bigger picture, going to the 4 hour or even a daily. But let's start just by getting, I usually work with the 1 hour chart, like hourly chart, just to get the idea and try to mix between those who go to the daily chart and those who go to the like intraday chart. So I'm trying to find the mixed balance between them. And basically, okay, let me check it out. On my end, I can see that it's moving. Let me know if you guys can see my screen. NQ, you can see my mouse key. Hey, Indonesia. All right. So I believe we're good to go. Seems like everything is normal. Let me know if there is any problems in the streaming. Okay, great, thanks. Alrighty, so NQ, we're looking at the NQ right now, hourly chart. What I want to do is basically analyze it, get familiar with it, of course, and just mark the levels that might block him from continuing to the upside, or might give us an idea of going to the downside, to the short side, basically. So I'll take the hourly chart, but I want to take a little bit more time interval. So I'll take almost a year back, and what I'm doing is basically going back to see where are the levels from earlier, basically. So you can see 2022, August 2022, we had this area of resistance, and right now we're just below it. The price of the NQ is 13,220, and what I'll do is mark this level at around 13,395-ish, 400. So this is the level you want to mark when you're looking at the NQ. Makes sense that we will see the price react dramatically when we will reach that, if we will reach that. Obviously we don't know if we will go higher or not, but the thing about trading is not about predicting if the price will go up or down. The thing about trading is basically prepare yourself, so when the price will reach that moment, you would be able to execute and find your own setup, basically. So as you can see, the level that I marked is right here. So we need just another push to the upside in order to reach that level, and from that point it will be definitely, at least intraday, interesting to short it, those levels. Obviously, like anything we do in trading, we're not really looking for entries or exiting just by one parameter. We want to combine few of those and only then decide if we can go long or short. So the same applies here as well. So if the price will go to that level of the 13,400, we should watch it, maybe look for some other indicators that will help you decide if the price will drop, such as you can use the MACD, MACD. We'll talk about it in a second for those of you not familiar with. And also look at the price, the way the price react to that level, or the way the price is moving toward that level. So for example, let me go to the 4H, like 4 hours. Okay, let me clean it just a sec. So let's say I'm looking at a 4-hour chart, right? So what I can do is basically start to analyze the waves, the trends, and to see how they react and how strong they are comparing to the previous wave. So maybe even a daily chart will help here. Yeah, that could be even better. So for example, let's talk about it here, and then we will understand it clearly for the moment we are at right now. So for example, you can see that the waves, the trends are a bit different from one to another, right? In most cases, this is not the case, but in most cases you will see like a banana shape. So the last trend, the last wave to the upside will be a bit more like a banana shape, with much more toward the downside basically. In this case we didn't see it, but in most cases if you start looking at it, you will find that the last trend basically is getting weaker, and that could be also an indication that the price might turn. Again, in this case we didn't get it. There's also a case when the price is rapidly going to a new high, and then you will usually see some high volume coming in at the end of the movement. The other option is basically a very easygoing trend at the end of the upside trend. So you can do the same thing when we're talking about this area as well. So looking at it basically on a daily chart at least, it looks still pretty strong to the upside. But we need to remember, and that's obviously depends on what you are trying to do. Are you trying to swing for a few days, few weeks, month, or are you looking to day trade it? If you're looking to day trade it, obviously those resistance levels, as I just mentioned, 13,400, that could be an easily placed intraday that could be potentially short. On a higher time frame, like a daily chart, you can see that we broke through this trend line, and we're basically looking pretty good to the upside. Double bottom and positive deviation in the MACD, diversion in the MACD, new lower lows at the price, but the MACD is showing a different angle. Instead of going to the downside and breaking the previous low, we actually made a new higher low. And we broke through the 200 EMA and the 420 EMA, 420. So like the bigger picture looks pretty good to the upside. Of course, we will run into some major technical resistance level as we continue to the upside, and we will need to see if the price can work with them. For example, this area at around the 14,000, maybe a little bit lower than that. But again, when you're going a little bit in depth and going down to the hourly chart, you can easily see the resistance level at the 13,400, and that could be a great place to short it intraday. And again, if we will have a little bit more indicators that will help to decide that this is the moment. We can also mark this trend line, and if we duplicate it, this will be our trend. So basically the channel that we've been trading in. So another option could be that we will break through, reach that level, maybe play with it a little bit, go just a tiny bit up, and then start dropping down. And of course, the next level you want to drop down to is this support level right now at around 1300. Also resistance from the previous the previous month. So that makes sense that if we either short it at the 13,400 or 13,600, either way we should see a reaction, at least intraday reaction to the downside from those levels. So this is the NQ. Nasdaq probably the same. You know, if we're looking at the S&P, pretty much the same. Should be. I'm on a 4-hour chart. We're getting into resistance levels right here. So if we'll break through, again, I guess at around 4,200, we should see a drop. But that's fairly the same. And another indicator you want to watch is the VX. The VX is the volatility index of the Chicago options, representing put options in Chicago, and basically it will go pretty much the opposite direction of the S&P. So let's say if the S&P is going up, the VIX will go down, and the opposite. Why it's important to us? Because the VIX works perfectly as a normal chart, and also have support levels and resistance levels. And if you understand them, in most cases, obviously not all the time, but in most cases, you can use that to your advantage. So for example, if you see that the VIX is around the 19 points, it makes sense that around this level of the 19, between the 20 and the 19, as you can see, we have a major support level or area. So it makes sense that it will bounce up when it will reach those 20 and 19. Now, if the VIX is going up, then the price of the S&P will drop down. And obviously, let's say the VIX dropped to the 19, to the 20 and the 19. We should see, and it will bounce from it, we should see, if we would look at the S&P, we should see the S&P reaching a resistance level, like we just mentioned in the Nasdaq, the 13,400 or the 13,600, or at the S&P is 4,200. So in most cases, it will correlate pretty nicely, and you just need to watch the VIX to just get another indication that the price should shift. And when you do that, when you have those parameters and you see that the VIX is at a support and the S&P is on a resistance level, you can first not go into a long trade, so not to buy any type of stock or a correlated currency, but you can also short the indices, for example. So this is very, very important and a super strong tool that you, in my opinion, want to use. I've been using it for many, many years. The correlation between the VIX and the S&P. You will see them working together in most cases, and it will give you just another edge when you want to make a decision, either to short or maybe not to get involved right now. So that's for the S&P and the Nasdaq and the VIX. Let's see if we have anything else. Pound, dollar. Let's look at it. If you have other currencies or any type of asset that have a chart, we can have a look. But just write me what you want to do with it. Long, short, which time frame are you looking at? Anything that you can add that might help? So we have that crazy drop. On a daily chart, we had that crazy drop in the pound, and now bouncing up a little bit. Still reaching, like getting inside of that range. As you can see, it's super range here at around the 125. So on a daily chart, I don't see a lot that I can actually understand, besides the fact that we're getting into like a resistance level at around the 125. That's that could be a nice place to start looking to short it, but again, that's not too obvious or not too clear, not clear enough. If I'm going to the hourly chart, we will probably have a little bit more information, that looks pretty good. Let's talk about this for a second. You have the level at the 125, right? Around this area of the 125. The price is continuing to the upside, but look at the MACD, and let me just do a quick overview for the MACD for those of you not familiar with. The MACD is basically an indicator combining EMAs, exponential moving averages, of 12, 26, and 9. Basically, the MACD is the difference between the 12 and the 26 exponential moving average, and the 9 is basically the one that you see the red line that plays with it. Now, in most cases, it will go when you look at the MACD and you look at the chart, it will go together. But some cases, when we are reaching highs or new lows, you will see a negative diversion between what the price will show you and what the MACD will show you. So if you look at the chart right now, you can see that the MACD creating new highs. Sorry, the chart creating new highs. But look at the MACD is creating new highs but lower highs, right? Dropping down while the price here is moving higher. And in most cases, when you will see such a thing, the MACD is basically telling you that the momentum of the buyers are getting a bit weaker than what the price is actually showing you. So you're getting new highs, but the power of them, the push that they give, is getting a little bit weaker. And sometimes it will basically, as I mentioned, indicate a shift in the price. So in my opinion, in this case, for example, we're basically moving pretty nicely to the upside to reach those resistance level. And if the MACD will stay lower than the previous high, let me mark it. So let's say we will see the MACD going up, but it will stay lower. It will stay right here. So it will create new lower highs, while the price continue to touch the resistance and will create a new higher highs. So the price will show you like an indication that the price should continue to the upside, but actually the MACD will show you that we are getting weaker. And if we're doing that on a resistance level, a major resistance level, the 125, 124.5, then it makes sense that we will see the price falling from that area. And this is an hourly chart, so you can easily try to trade it intraday, like go to the 15-minute chart and try to just execute it on there. You can see also the stuff that we talked about before. Look at the waves, like the trends. They are getting weaker, except from the last one, like literally this one from the last few hours. The rest are getting pretty much weaker. You can see that the angle getting weaker, right? Like a banana shape, basically. So that was a strong wave. The other one is a little bit weaker. The angle is dropping a bit. More red candles coming in. Took it a little bit longer. Then look at this wave that is actually much weaker than the previous one. So basically those elements can sometimes, obviously not all the time, but sometimes can indicate of a potential drop. And again, a drop, when I'm saying a drop, is not like a daily chart, months of drop, but basically intraday to look to short the top at the resistance level. So that's the pound dollar that I see right now. Looks pretty good. Let's look at the 15-minute chart. Yeah, still similar to what we're expecting. You might see what I would look for is the deviation, the diversion in the MACD on the hourly chart, but you might see it also like on the 15-minute. The hourly chart will be a little bit more reliable in this case. Okay. Dollar yen considering drop. What are your thoughts? Let's see dollar yen. Okay. So drop to the 130s, even I'm with 80. Yeah, it did make a different move from most USD pairs. Let's see what we can understand from it. So first, when I'm going to chart any type of asset, I want to just see a little bit the big picture, but also just get the idea where the levels are. So if the price will shift to them, we'll go there. Where should I expect to see a stop? So definitely, this is the area from the bottom right, as we held it perfectly the last few times. Bounced up, reached that top. This is the resistance we are at right now. And if we'll break through that, there are obviously some smaller levels around here, but talking about the big resistance level should be around the 125-ish. And that's plenty of space to the upside. Again, there are some small levels here, but looking at the bigger picture, this is the area you want to watch for, the 135. Are you saying a drop to the 130.70, 7.8, and from there you want to short it basically all the way to the downside? I mean, first of all, going all the way down, that's interesting, but you need to remember that you have this major level here at 131.70ish. So that should be a strong enough level to block you from continuing to the downside. At least, again, depends on what you're looking for. Are you looking for a long term or short term? But definitely there will be a support here that will, should block the price and let it bounce. So even if you shorten it and it goes to your favor, consider to take some partial at least. It does look good to the downside. You reach that level, dropped, again returning to this small support area that was resistant. So what I would do, I would build a scenario around it. So let's say if it will drop and break the support level of the 132.70ish, wait for a retest and then short it. Okay, I see that you're saying that you want to buy it at around this level. So we'll talk about it in a second, but for those of you who want to short it, maybe a drop, a retest to the level to see that the sellers basically coming back and acting as resistance for the price, and from there drop all the way to the support level at around 130, 170ish. That could be a nice move to the downside. Obviously, if it will go there and let's say it will bounce up, try again, break it, retest it, then you can play again another move and try to short it all the way down. Now, so that's that's the idea that I would go for, at least to see that the scenario occurring and then occurs, and then click and execute the trade. So that's one scenario I would go for. Another option, and this is something that I do obviously also with stocks all the time, is basically creating scenarios. As I said before, we're not looking to predict if the price will drop or go up. This is not the case of what we are trying to do. What we are trying to do is basically build scenarios, and then when we see it, act upon it and basically execute the trade. Comparing to what in most cases, you probably, if you've been in the market for a while, probably your family members all ask you about what you think about the market. If it, do you think if that the S&P will finish strong this year or whatever it is? As traders, it doesn't really matter for us, right? I don't really care if the price will go up or down. I don't care if the S&P will finish 10% up or 50% down. Generally speaking, I want to trade the move. So I'm creating scenarios, and if I see that the scenario is occurring, then I'm executing the trade. So to the upside, if the price will continue to the upside, although in my opinion, at least for now, it looks pretty good to the downside if it will break that support level. So for the upside, we will have obviously a resistance from the previous high. If we will break through it and retest it, so the resistance will become support, definitely a potential long all the way to the 120, 135, and that's a nice move there. So that could be also a great scenario to work with. So yeah, either way, you have something that might happen and you can trade it. Going back to your question, Kevin, you're saying you want to buy it at around this level. I mean, it makes sense that you can buy it around here because we are getting into or will get to a support level, a major support level, so it makes sense. But you know what, let's talk a little bit about that. How you build your trade, basically the position, because in most cases, and this is something that a lot of traders, I saw that also in the 5ers and also in Trader Pool and other platforms, other prop, fail, is basically a lot of traders just go all in and try to find the one lucky trade. And if you go all in, let's say the price did went down and you bought it and you took your full risk here, then you don't give yourself enough space for the price to bounce and play like it did here. For example, for those who bought in this area, that was great because it went right to their favor. But for those who bought here, it went to their favor, probably didn't take partial, took them out, and only then bounced and went up. So in most cases, especially in the Forex market, you will see so many false breaks, so many manipulation of the price, and if you go in all in and not building your position, you're basically losing a lot of the idea of being a trader. Because when you go to a casino, you can put on the roulette, you can put a black or a red, right? And that's it. Doesn't matter what happened, you will lose or win. In case of trading, and this is by far the most important element that we have, it's not really about getting in the right moment, but as long as you have the right idea, what you need to do is manage the risk and manage the trade. So let's say you found that it dropped and you want to buy it. You bought some part, right? You didn't go all in. Let's say you have $500 risk on that trade, right? Instead of taking the full $500 risk, you're only risking $100. Let's say in this area that you entered. If it dropped against you, let's say it bounced up a little bit and then dropped, because there is a crazy level here, right? So it makes sense it would want to go there. Drop against you and now bouncing up, you can head here more against you with another $100 risk between those boundaries of the $500. It dropped again, maybe took those stop losses, right? You add another 100. You're still risking the $500 that you thought or basically decided to risk. So if it took out those stop losses and bouncing up, it makes sense that now you will see the new move, the real move, and then you can add more to the position. So basically what I'm saying is, when you have a specific risk per trade or per day, you don't want to go all in that trade. You want to decide, okay, I'm risking $500 for the trade, but I'm going with chunks, like smaller chunks. So $100 risk, another $100 risk, another 100. That way you give yourself enough space, enough room to play around with. And in most cases, if the idea of the trade is right, in most cases you're actually gonna make money. Comparing to the other option, and that's again, a lot of traders are doing, and they're mistaken by doing that. Basically, they have $500 risk. They're going all in at one point. That's it, in one single execution. And that doesn't make sense, because the price will bounce many times until it will start go to your favor in most cases, because that's the idea of playing with the manipulate the price and the market makers, the stop hunting, all of those things. So instead of working with that stop and with that full risk, you basically build your position inside of the boundaries of the risk. Yeah, Dennis. Yeah, I mean, if you want to stay in the game, you got to do that slowly. Again, it's okay to risk. I had and still have trades that I'm risking $5,000 on a trade, but I'm not risking the full 5,000 just by one click. It just doesn't make sense. You try to think of it, how many times you really can be right on the dot, right on the money. So you entered and that's it. It goes to your favor, or at least not taking your stop. It's super hard to do that. Instead of that, when you enter in with chunks, you don't really need to be accurate. I can enter, I don't have it here, but I can enter like even in the bottom or the top, but as long as I continue to add to my position the right way, I can manage the trade and basically make money out of it. Great. Okay, Anas, you're asking about what can we plan to do in case of the opposite scenario happening. So basically, a few things. First, let's say you said, okay, I'm waiting for that drop and then the retest, and from here I'm going short, right? That's the first scenario. First option, we have a couple of options, obviously. One, it did drop, retest, you entered, it worked perfectly, everything is okay. Other option, dropped and continued to the downside, didn't retest at all. So maybe you missed that trade, and that's fine. There are many trades every day, and the market, until we'll see a big revolution in the economy or whatever it is in the world, the market will be here tomorrow as well. So don't try to rush it. That's okay to miss the trade. it's not really, when you think of it mentally, it's not really missing the trade because it's not yours. As soon as you, and this is why I love so much drawing scenarios, because as soon as you draw the scenario, if it's not doing the exact thing you want to see, it's not your trade. So it's super easy to let it go and try to find a different scenario. So basically, if you look at my charts, you will see lots of scenarios on the market or some assets, some stocks. And if I'm not seeing what I want to see, that's okay. It's just not my trade. So that's another option. And of course, an option that you enter the trade, it did break, retest, you entered the short position and took out your stop loss. That's also one case. And the other option is basically, like I said, going up, breaking through the level, retesting it, and then you want to trade it. In this case, as I mentioned just now, let's say it did go up, went down, retest it. You don't really need to wait for, in most cases, a lot of traders are waiting for like a candle, right? Some, I don't know, hammer or whatever it is that will prove that will prove, I don't know, like a green candle, and they will go above it. Shouldn't be the case. If you're working like I just mentioned, when it dropped to those levels, here you're already inside. When it's dropped, it didn't held yet. You didn't see it holding the position, but since you're not risking the full, let's say $500, you're risking only 100, so that's fine. You can actually enter here, and then it will drop a little bit more, get into those levels. You will add another here, another $100, and when it bounced up, now you can add more. So basically, the average price is around this level, and now that you're already in, it's much easier to basically to commit to that trade, because a lot of the time you'll be scared to take the full position, the 500, right? And you're not sure. In this case, when you're acting like I just mentioned and break down the 500 into 5 pieces, you actually can build it pretty simply, because even if you entered here and you're not correct on that idea and it dropped down against you, then you, instead of losing 500, you're just down 200, let's say, or 300. So you feel much more comfortable to take the trade and have a commitment to it. To click the mouse key to really execute the trade. So just go, just understand, what you need to understand is just how much you're willing to risk per trade, and from there, how do you want to break it? Do you want to break it into 5 pieces, like 500 and 100 each? You want to start by building it percentage-wise. Let's say you have 100%, so you will do 20% each time, etc. Yeah, so Muhammad, you're asking a good question. Where is the right place to put your stop loss? The right place to put your stop loss is within those boundaries of the risk, the dollar risk. Of course, you can mix them together between how much I'm willing to lose and where are the levels that might block the price to drop down again. So if we take in this, let's take the long scenario, right? It broke through, retest. Where are the levels that might help us and block the price to continue to the downside? So as we can go, so if we go to the history, we can see that we have this area right here. Right, you can see the area that we played here as resistance, support, resistance, broke through it, resistance, again resistance. So this is the area you want to start building your risk with the stop loss, basically. So if I'm entering here, I'm entering another chunk here, and I give myself enough space that if the price will continue to the downside, even to this level, I still have another 100 or 200 out of the 500 that I can add to that position, and my last stop loss will be below it when I'm basically risking the full $500. Does that make sense? Nice. Okay. So I guess I'll leave you with this. As I mentioned before, guys, you have a QR on your screen, and the QR is for the event that we will host this June in London. We're going to have a trading festival, lots of gaming, lots of competitions, a beer, and of course top-notch educational materials. We brought a lot of good speakers, really interesting traders, and also psychological, on the psychological aspect of it. And you know, like I said, gonna be like 500, 600 traders just like you, talking about trading the whole day. And after the event, we will grab another beer and do it even more casually. So if you are in the area and if you want to do that, definitely check out the QR on the screen. We call it Traders Day Live. We're going to do some good stuff there, racing, arcade racing cars, and VR, and some other cool stuff. Don't miss it. That's it, guys. So have a great day and week, and I'll see you next time. Take care for now. Bye bye.